Everyone, it's Ben here from the Intraday Investors, and in this video Troy and I are going to go over his portfolio rebalance as well as my trading week. So we're going to start with the trading week. So from November 2nd to November 6th, being Tuesday to Friday, I made a gross amount of $46.66. On Monday I was not able to trade. I had a funeral to attend to. Tuesday I made $681, Wednesday $18.99, Thursday $508, and Friday $15.78. So in those 4 days, I was able to take a total of 24 trades, 21 being winners, 23 being losers. That makes for an 87% accuracy rating. I took 77 contracts. Now with TD Ameritrade, they charge 65 cents. I have a discounted rate of 60 cents. So I was able to make $50. I lost $50 because of fees. So in total, I paid $50 worth of commission fees. And then we're doing a 20% capital gains tax rate. Now it varies depending on your income. So we're just going to do the 20% rate. So $46.66 was the gross amount, and then 20% of that is $933. So subtract that to get $37.33 in net profits for the week. This week was really good for my confidence. I've had a couple of bad weeks in the past, so this was really good to just step up my game and get the November rolling. Now we're going to go over to the charts, and we're going to check out a trade I took on TTD and Troy's portfolio rebalance.
What's going on, traders? Ben and I from the Intraday Investors, and in this video we're going to be talking about Ben's trade on the trade desk, which is a digital advertising company, and and how he took advantage of an opportunity that presented itself.
Yeah, so we're looking at the chart right here from TTD. They had an earnings report Thursday after the market, and then Friday was when I took the trade. So this is just my P&L from the whole week.
Your
and
imports.
Then, and then this is the TTD trade I took. So I had $860 I made from it, and then this is the earnings report. So out of the last 3 or 4 quarters, TTD has posted profitable earnings as well as revenue, and the stock's been making all-time highs. If we look at the yearly chart, it's only been going up, and then this is the yearly chart we're looking at here. So as you can see, the stock's been really strong, and then obviously that earnings report kind of kicked things off for Friday. So I like these trades when we take them over the all-time high. So as you can see, TTD makes that earnings gap up Thursday, and then it flags, and then during the pre-market we say, okay, 744 is the level we want to take it off. But on a stock like this where the options can get really bad, I like them to just settle out and I wait for the best risk reward opportunity,
Because the spreads between the bid and the ask tend to widen on you.
Very wide.
So it's hard to get good fills on them, and you want to get that midpoint between the bid and the ask, which you did really well with.
Yeah, so I bought 2 contracts when we broke 780. I bought them at 890. I sold one at 1360 here, and then I sold my last contract at 800 when we were rejecting. Now I had the same week expiry options, so when prices pull back like this, the options tend to bleed out really quickly, especially with time decay. So as soon as I saw the trend start to diminish out here,
the volume's dying down.
The volume is dying down. I decided to just take off the contract. So
that was your price target. Too,
yeah, exactly. So that was good for an $860 profit. And then if we're looking at this trade too, like if you decide to sell here, you can always re-enter because it makes a really nice bull flag and then another 15-20 point move off the highs. So TTD is just a really good example of how,
because you can see right here how it hit that price point about like 813, 814, kept selling off, and that's showing a pretty strong resistance. So you can have a market conditional, or you can keep this on your watch list. That when it breaks that level, okay, well, I mean, we didn't take that right there, but that's another opportunity. So it's not about like holding it. Oh yeah, I could have held it and made this much, but you can always re-enter. So take what the market gives you and then move on to another opportunity.
Exactly. And with the market conditions being the way they were or have been, like choppy in the last few weeks, it's really important to find stocks with catalysts like this. Like the trade desk had a really good earnings report, so it's important to follow companies that have good news catalysts.
Right.
And this is exactly something that played out.
The trade desk is a great company, especially with the coronavirus accelerated them because everything's going streaming. They have Roku's, everyone's streaming now, so it's really good for their ad revenue, and it only makes sense. So I mean, I do have a share at 207, and I sold into earnings report at 720. What I should have done, and I'm slapping myself for, is hold on to it. And make my decision based off the earnings report. But I traded off emotion, and I was still up 400%. But you gotta just move on. I took that money that I made from TTD and put it into innovation ETFs, ARK and ARKW, which have the trade desk in it, minimize my risk, and I'm more diversified.
Exactly. And like what Troy was saying, when we're taking trades like this, it's important to take our emotion out of the positions, because emotion leads to selling early or just being too involved with your P&L. So it's important to just watch the chart and understand what the price is telling you to do.
Don't trade based off your P&L. Trade based off price action.
Exactly.
Look at the chart. Don't be like, okay, I'm up 860 or so and trade based off that, because you can miss out on a lot of returns if you trade based off your own justification on or your reasoning on why you should hold based off the chart. Trade off the chart. Let the chart do the talking.
Exactly.
Yeah, that was a really good trade. I'm really impressed with that. 860 profit. This is one of your best weeks.
Yeah, it's my second best week of my trading career. My first best week was 5,100, and I made that last year in March trading Tesla. So this is a pretty good week for me, really good for my confidence.
Awesome. So now I'm going to be talking about my portfolio rebalance. So what I like to do is have long-term positions, and I like to intraday scalp options. But I like to have a backbone. I like to have safety net. So what I do is I invest in ETFs, stocks, and REITs. Just to build that portfolio, because, later down the road, I'm going to thank myself, because, I like the intraday scalp, but I also like to have that long-term, vision. What I want to talk about is this right here. As you can see, the S&P 500 index under recent presidents, you can see Bush, Clinton, Bush, Obama, Trump. So based on history, the S&P 500 tends to do better under Democratic presidents. So that would be very idiotic for me to, sell my long-term portfolio because I think Trump or Biden's going to get in, because this wouldn't make any sense, because based on history, the stock market just goes up. So, I did rebalance my portfolio, and I haven't rebalanced it since March. So I think, with the uncertainty going on, and with, this huge run up since March, I had to sell off some things. There's a difference between a short-term and long-term capital gains tax. So the reason why, I'm up on Square just alone, I'm up about $3,000 on it. And I'm going to hold that for a couple years, because I truly believe in the company. They invested millions of dollars into Bitcoin. I believe in Bitcoin. I know Jack Dorsey, the CEO, is all about, Bitcoin. So I really believe in SQ. So that's something I'm going to hold for a long time. But there's a bunch of stocks that I bought that I was in the red on. I was bag holding. Bag holding means, I'm hoping for an uptrend. I'm just holding on to it, hoping for, a reversal, and hope is not a strategy. So, I sold my losers to rebalance my portfolio, and I know tax season's coming up, so I'm going to utilize those losses against my gain, okay? And I could always get back in those stocks, but, I'm trying to minimize my risk and, have more cash, because cash is still a position. People don't understand that cash is still a position. And, I got about 7,500 in cash. I got 7,700 in cash option buying power, to put that money to work if an opportunity presents itself. Okay, I'm going to buy in the dips. I'm going to buy if we see lows. I'm not going to be afraid. I'm going to put that money to work, and I'm minimizing my risk. I did it on a Friday, and it was the first time I rebalanced my portfolio since March, like I said. And that's something I do. A lot of people rebalance their portfolios quarterly. I'm going to do it once a year. Again, I have a 5 to 10 year horizon on a lot of my stocks. As you can see, I got Apple, AMD, ARKK, which is an innovation ETF that that has Square, Tesla, a lot of these innovation companies in them. ARKW, which is an internet ETF, next generation, which has the trade desk in it. So I did sell the trade desk for a 400% gain, but I put that money into ARKW. I got some financials, Bank of America. I got Citigroup, Carnival. I have a cybersecurity ETF that I bought because I had some cybersecurity stocks like FireEye and Rapid7. So, I sold off some of those to put into more of a safe position fund, which is the cybersecurity ETF. I got Cloudera, which is a cloud computing company. I also have a cloud computing ETF, which has Twilio in it. I do have one share of Twilio. I'm not going to sell it. I got in at $80, TWLO, which I'm going to be holding that. It's at $292 right now, and I got in at $80. Why would I sell that? I got one share. I got nothing to lose. I got Salesforce, an energy stock, Dropbox, Dow Jones ETF, Disney, DraftKings, because I know they're going to legalize gambling, in a lot of states. Duke Energy, Fastly, which I am bag holding on, FSLY, which I probably should have sold when it went up to 130s. I got in at like 77. Now I'm bag holding it, but I do believe in the company, so I that's the only thing I'm really holding that I'm down on. I got Hero, which is a video game esports ETF. I'm from Buffalo, and I see these buses, University of Buffalo, and they have these posters on the back that say esports coming in 2021. So I know esports are going to be huge in the next coming years. And I'm not going to invest in Activision, Nintendo, Take-Two Software. What else do they got? Nvidia. I'm just going to buy the ETF because it's less. I'm working smarter, not harder. I'm not going to just try to pick these specific stocks. Now I have the ETF that has all the stocks within it. I actually sold Boeing. I got Boeing pretty cheap, but I bought the ETF with Boeing in it, which is ITA, which is an aerospace defense ETF. I have a Russell 2000 ETF, which is small caps, Coca-Cola, Lyft, which I really believe in ride sharing, and Uber. I also have Uber. Microsoft pays a really nice dividend. I got 5 shares. You can see that I applied to DRIP, which I'm dividend reinvesting. That's why I have fractional shares. Norwegian Cruise Lines, NEO, Nvidia, another REITO. I don't know why this isn't opening. Planet 13, which is a dispensary in California, which is huge. Las Vegas, REIT, Reality Income, QQQ, obviously tracks performance of the Nasdaq, Royal Caribbean. So I got some cruise lines, I got some ETFs, I got some tech companies, Rapid7, cybersecurity, another REIT. This one, Smile Direct Club. I really like the CEO. The CEO invested a lot of money into the company, so obviously he believes in the company, and that's something I look for. Got 25 shares. SQ, 23 shares with a trade price at $44, which is excellent because it's at 198. SPY, S&P 500. I don't know how I feel about this one. AT&T, they pay a really nice dividend. I'm actually down 37 on it, but they pay a really nice dividend. I was actually thinking about selling that off and putting that into VIG, which is a Vanguard Dividend Appreciation ETF. So I'm thinking about selling T and putting it into that because it's more diversified. I'm not just gonna put all this because I want to dollar cost average, and I don't feel comfortable dollar costing averaging into AT&T. They do pay a nice dividend, but I'd rather dollar cost average into Vanguard Appreciation dividends, which has AT&T. They have Lowe's. They have all these companies in them, which pay nice dividends. Tesla, Take-Two, Twilio, Uber. I have a UFO, which has Virgin Galactic in it. It is a space ETF, and I believe in that in the long run. Viacom's streaming, another REIT, Vanguard Real Estate, XLF, which is financial ETF. VWO, which is investing in emerging market ETF, and VTI, which is the Vanguard Total Stock Market ETF. So what I'm trying to get at is, I can sleep at night. I had a few stocks that I couldn't sleep at night knowing because, too much risk on the table. I didn't really know much about the company. I didn't really do too much due diligence. I traded based off of the chart, technicals, but, I'm trying to make my portfolio more simple. I had a lot more holdings, and I feel more comfortable with what I own. So we're going to see, I got net liquidity of $34,291. So, my portfolio is growing at a very fast rate, and I want to keep it that way. And I don't want to risk, I am young, but I don't want to take any risks that I don't need to take, especially with all the uncertainty going on. So I hope you enjoy this video. You can see all my holdings, and, I'm being very transparent with you guys. And yeah, that's what we're about at Intraday Investors is transparency and authenticity. Okay, so that's pretty much it. We're gonna wrap the video up here. Really enjoyed making this video, and I hope you guys enjoyed as well. Thank you.